Hey there, this is Pete Townsend from Norio Ventures, and welcome to Money Never Sleeps, a podcast that looks inside the head of entrepreneurs and at the crossover of startups, enterprise, finance, technology, and life as we know it. This episode of Money Never Sleeps is kindly sponsored by Ireland's fintech and financial services recruitment specialists, Top Tier Recruitment. If you or a colleague need help attracting and retaining great talent for your fintech or financial services company, it is highly advisable that you build a relationship with a team at Top Tier Recruitment. You can find them at toptierrecruitment.com and tell them we sent you. This week, we talked to Ambre Soubiran, the CEO of Kaiko, a market data provider in the blockchain-based digital asset space, providing institutional investors and market participants with enterprise-grade data infrastructure. It's hard not to find interesting people in blockchain and crypto, as people from all walks of life are following their fascination with crypto and wider digital assets and just go headlong down a whole new path. So let's follow that path right now with Ambre Soubiran on this week's episode of Money Never Sleeps.
Money never sleeps, pal.
Here we go again. Welcome to Money Never Sleeps. We're recording today from the home studio, and I'm on with Ambre Soubiran, CEO of Kaiko, the leading provider of institutional-grade cryptocurrency market data. Kaiko was founded in 2014, and as a digital asset space operates in dog years, they're like the Bloomberg of crypto. With that, welcome to the show, Ambre.
Thanks for having me, Pete. Very nice to be here.
Awesome. So Graham Rodford from Archax connected us after he and I caught up recently. And I said this last week on our 100th episode that we did, but I'll say it again. Congrats to Graham again for getting their initial regulatory authorizations from the UK's Financial Conduct Authority, which we all refer to lovingly as the FCA. So you and I had an intro chat shortly after that wonderful intro from Graham, and he does a good job with those intros. And we found some interesting crossover points to riff on. So away we go, and let's just get right into this. So maybe just to get things started, if you could walk us through your backstory, Ambre, and we'll see where it goes. Yeah.
Yeah, absolutely. So hi, my name is indeed Ambre. I currently run Kaiko, and my backstory. So I am an applied math student. That's kind of my educational background. Started working like pretty much every math student in Paris in finance. So I started doing an internship as an equity derivative structurer here in Paris. Worked out quite well. For the little fun note at the end of my internship, I decided to go travel around the world. Back then, the bank told me, "You're completely crazy. This is the opportunity of your lifetime to get a job in finance. You should take it. You should stay. You should go and travel." I went and I traveled, and when I came back, they offered me the same job again, which I took.
Of course.
So anyway, I went, traveled for a while, came back, and then took a real job at HSBC in the equity derivatives structuring team. Started off in Paris, moved to London, and then I stayed for a small decade in London, still doing kind of capital markets, equity derivative based structuring. So that's kind of my background from a professional standpoint. I had a couple of side interests. One of them was initially Bitcoin before it became more wildly blockchain and then crypto. But I started getting interested and personally invested in Bitcoin and then other cryptos from 2012.
Okay.
So quite early on, got really excited about it. I was generally interested in technology, and especially for anything that was in the areas of finance and food. My three big investment thesis since forever is money, food, and health.
Yeah.
Three things with which I think nobody can live. So anyway, that was the money technology side of things, was blockchain. I got really excited about it, started to initially try to convince, I was working for HSBC and tried to convince HSBC that they had to look into that. Unfortunately, it was a bit early on. That was the early days back in 2013, 2014. Bitcoin was still relatively obscure, and I didn't get much traction internally. But kept on kind of my own personal growing interest and met a few people in the blockchain space, including someone who is now a business partner, who is the original founder of Kaiko, a guy called Pascal Gauthier, who is currently the CEO at Ledger. Pascal had founded Kaiko. I met him when he started Kaiko in 2014, more as a kind of person to throw ideas back and forth, giving him my experience in working in financial institutions, how we use data, what was the appetite of more traditional financial institutions for crypto, which was honestly 0 to negative at this point. But anyway, we got in touch back then, stayed in touch. And then later, a couple of years later in 2016, Pascal joined Ledger, which is a crypto custodian, as CEO, and I joined Kaiko.
Gotcha. Makes a lot of sense. Really interesting that with your applied maths background, curiosity around technology, around food, around money. We'll get to the food in a bit because you and I talked about this before. It just kind of feels like, Bitcoin back in 2012. That was very good timing on your part to open your eyes into this space, wouldn't you think?
Yeah, absolutely. And honestly, it was for me, it was a refreshing kind of new venture. I was going to some like really, really random Bitcoin meetups and like underground venues on Brick Lane in London. It was really sketchy at the time, but in a good way. It was still like really smart, people that were inspired in like changing the world and doing so in a technological, mathematical way, which is, things that are close to my heart. But it was done in a way that was, Bitcoin is very often perceived as like a crypto anarchist, revolutionary, against institutions mindset, which is indeed the genesis of it. But not everyone is like that. And I think it was more about challenging the status quo and rethinking the way things could be approached when it came to money and the notions of money. And I think that's what I really liked about those meetups. It was like a bunch of smart people that just wanted to approach, I guess, life and money differently. So it was really refreshing when I started getting into this.
Yeah, and I know that my pal Colin Platt, who I think you might know, he was banging around those same meetups going back to 2013 in London, and that's where I think he met Simon Taylor from 11FS that started, their friendship and where they built a few things from there, which was quite interesting. But yeah, it's this getting people together with similar mindsets, similar interests, and just see where things go.
I was just going to say a very funny anecdote. The first time I actually so I started going to meetups quite early on. The first time I actually bought crypto was a meetup that took place end of November 2013. There were some guys that came from the US that were selling minted Bitcoins. They were selling silver coins that had a QR code minted on the back of it, and that represented a quarter of Bitcoin back then, which was worth something like $40 or $50.
Okay.
And I basically decided to get that as a Christmas gift for my siblings and my parents. And I was very excited. I thought, this is the money of the future. It's a minted coin. This is really cool. Bought that for them, gave it to them at Christmas, and they were like, oh my God, what is this? This sucks. This is the worst Christmas gift I've ever had.
I know. I've got a gold one. I've got one of those fake gold Bitcoins that a friend of mine gave me. Shout out to Paul Thompson. Gave it to me after, we were out for pre-Christmas drinks one year, and I was telling about what I was working on, and he gave me one of those. And when I, back before the pandemic, when I was out doing talks and events and stuff like that, I'd use it as a prop, right? I just hold it up and say, okay, imagine taking the gold wrapper off of this and replacing that with a wrapper of an Amazon publicly traded equity or Microsoft or whatever, just to get people's imagination going. And then I'd hold up a dollar bill and said, if you're thinking about the traceability of this compared to the traceability of this dollar bill, traceability of this actual real Bitcoin, not this gold fake one, is far greater than the traceability of this dollar bill or this $100 bill or this Swift transfer or whatever you want to call it. So, it's great to see the banking minds changing around this. I know your former friends, or probably still your friends at HSBC. Just this week, they announced that they are doing something in the space, and I think there was a bond offering that was digital that they took part in getting that to market, which was pretty cool to see. I know a few of the guys there. I think Kieran Roddy moved out to Hong Kong. I know I used to work with him years ago, and he's working on a few of those things with HSBC as well.
Yeah, I mean, banks definitely don't ignore blockchain anymore. I was a bit, I guess, trying to push that at a time where they were not ready for it yet. But the R3 initiative, which is, puts a lot of leading banks around the table trying to discuss blockchain initiatives. I guess 2014 was just too early, all in, they didn't want to hear about it. And when I left, the discourse was more around blockchain, not crypto.
Yep.
And that was very, like distributed ledger technology, but not crypto. Crypto is bad, blockchain good, kind of, which frustrates me a little bit because for me, like what underpins a blockchain, what makes it work are the kind of consensus and incentivization mechanism. And if you don't have a crypto, we can call it whatever, a token, unit of value, anything that incentivizes people to maintain the network in a decentralized fashion. If you don't have that financial kind of asset unit of accounts tied to the blockchain, you're missing out on the main points of what makes a blockchain work. So absolutely. I don't like the blockchain not crypto thesis, but that's kind of how all those more traditional institutions started getting comfortable with the idea, and then they understood kind of why units of accounts were important as part of a blockchain protocol. But there was a slow kind of adoption curve.
Yeah, there has been. And I was part of that blockchain, not crypto club. I back in 2016, 2017, and I think we're all past that now, which is to say that if you are going to embrace digital assets, blockchain, distributed ledger technology as a catalyst for major transformation of the financial markets, it's kind of doing it an injustice by not going all the way back to 2008, 2009 to seeing where it all started. Because when you understand those concepts, you understand the potential and where it can all go, right? You can understand the applications that are coming to market. And also, I talk frequently about this alternative economy that has been springing up over the last number of years in the crypto space, and call it DeFi, call it what you want, right? But this off-radar economic graph with this supply and demand of global money, and a hole being poked in the bottom of that graph, and that being cryptocurrency, and saying things are changing, the world is changing, inflation is changing, central bank policy is changing, and there is a part of that is due to the economic capital being redirected to cryptocurrency. Anyway, listen, let's talk about Kaiko for a minute. Can you tell me what is Kaiko and why are you doing this specifically?
Yeah, absolutely. So Kaiko, we are a market data provider. We are focused solely on kind of the institutional B2B segment of the market. And I'll explain why is that. It's more of a consequence of our product than anything. But so we're connected to pretty much all crypto exchanges out there. About 100 as of now, which represents probably 98% of the traded volume globally. As I'm not including OTC, etc. But as far as exchanges and marketplaces are concerned, we cover pretty much everything. For any exchange we're integrated with, we cover every traded instrument, which brings up to something like 37,000 instruments as of yesterday. We add new instruments on a daily basis. And what I call market data is all the buy orders, all the sell orders, which kind of constitute the depth and the structure of the markets, as well as every single executed transaction, down to the tick level. So for those 37 plus instruments, which includes spots, futures, options, perpetual swaps, pretty much anything that is a financial instrument tied to a crypto asset, we cover it from a market data perspective. Market data, again, being limited to order book data, buy and sell orders, and execute transaction. So we gather all of this data at scale. I think we have something like 37 billion trades historically stored in our database. We've been doing that since 2011. So we have, I think, the longest standing history when it comes to market data. You could just plug and play with our API, connect to that, and access the data in a standardized fashion through a single API. That's what we provide to the market.
Okay. Makes sense. And in the intro, I kind of made that comparison to the Bloomberg of crypto, really, right? And I'm thinking back to my early entry point into the financial markets in 1995 and seeing, an early Bloomberg terminal, but it was probably 13 years after the first Bloomberg terminal came to market, right? Which was 1982. I look back to that this morning, and that kind of context of being a data provider in this market that is moving so quickly and with the technology evolving every month, every day, it's a very dynamic, fast-moving, fast-paced place to be a part of. I mean, how do you manage all that?
So, I mean, we try to keep up, right? We add new exchanges, new markets. Currently, obviously, with all the excitement around decentralized exchanges, we've added as well, like a Uniswap integration recently. We're trying to be, on top of the wave or everything that has to do with data and providing data as well for DeFi applications. So we're currently running a couple of nodes and providing data for price oracles. We're trying to stay ahead of the curve as much as we can, but it takes a lot of work. You're right.
I bet.
It's moving fast.
It's fascinating.
Yeah.
And with your, when you became CEO, how did that all unfold? What was that entry point?
So the story of we kind of like to joke with Pascal that we're a bit like Kaiko's a bit like a phoenix, and we kind of had a near-death experience and came out of our own ashes at some point.
Yeah.
Pascal had a brilliant idea, right? There is a obvious need for infrastructure players in the space to provide market participants with access to information, right? That's what we do. So the need is clear. It's just a question of maturity of the ecosystem. And back in 2014, when he started the company, it was just too early. The market was very retail driven. People like me buying Bitcoin didn't need to access historical data across dozens of exchanges to decide where I would buy my crypto, right? I would just go on whatever exchange was easiest for me. So there was no institutional demand, no willingness to pay for sophisticated market data back then. Pascal had hired initially a pretty brilliant team that started the kind of foundation blocks of our stack today. However, in 2016, when we had this conversation about Pascal kind of joining Ledger and me joining Kaiko, there was pretty much no market yet, and the team had started moving on to other kind of companies. So when I took over the company, which I acquired a controlling stake into, at that point, I reinvested in the company, but there was no clients and there was no more employees. Okay. So it was really what I acquired was the brand, the historical data, and the stack, like the actual technology. But there was no existing clients or employees back then. We really hired a brand new team over the course of 2017. And the funny story, or I don't know if it's funny, it's maybe funny only for data nerds. But like initially when I took the company, it was 2016. So ICO craze, people actually started, take a more sophisticated approach, I guess, to investment. Everybody was trying to become its own kind of, quantitative fund and try to put models on the back of ICOs, trying to create some kind of fundamental valuation framework, etc. And so people did start to need data. But back then, I didn't have an API, I didn't have an engineering team. Yeah. I was kind of, all I had was historical data and technology that kept adding data to the database. So when we started off, I was really like selling, literally CSV files that I was zipping and sending by email. I've shipped hard drives. We've done some absolutely horrendous things back then. What we sell today is API keys that gives you access to the database, basically.
Okay, fascinating. I'm just thinking of one of the old data providers that when I was with BNP Paribas back in, 2010, 2011, and this was for the credit derivatives market. They said, listen, we've got these great data sets. Do you want to just take them and mess around with them and see what you can do with them? And I said, yeah, why not? I'll have a look. And I didn't really do much with them. And they kept coming back to me every couple of months saying, do you want to sign up? Do you want to sign up? I said, well, don't really have a need for it yet. But I'm imagining those data files I was getting and thinking of your original Kaiko data files and thinking they're pretty much were the same thing, right? And for you to then do what is in effect Ambre Soubiran doing a lift out or doing an acqui-hire of that business, more or less, and taking that to what it is today, that's pretty fascinating.
Yeah, it's been a very exciting adventure now. I haven't really talked about the team, but we're 16 people, headquartered in Paris, but we have an office in New York and an office in Tokyo. But it's been a very exciting journey, and honestly, the team is incredible. We're mostly technical right now, so like out of the team, more than half are engineers. Really working on the technology, the backend, the stack, and the rest is product. Product, business development, etc.
I love it. I absolutely love it. Tell me, what do you think about throughout this whole journey since 2016 to build this business or to take it and transform it really into what it is today? Raising capital, building out the client base. What do you think has been the single most important day in that journey, and what happened that day?
It's a tough question. I don't think honestly, it would be really hard to pinpoint to a day. I feel that like closing our seed round last year was a great day in the sense that it just like, gives you a bit of like leeway to invest. Like we were profitable in the past, like for most of our time actually. But then we decided to expand the team, hire more engineers, open the New York office, etc. And that wouldn't have been possible unless we managed to raise and invest more, which is key for growth. So I guess that was definitely a milestone for Kaiko.
Okay.
But like there's so many great days. There's some like whenever we launch a new product stuff, we launch some like quantitative research that had a very good impact in the market. I feel that we try to celebrate every little thing here.
Yeah.
I'm the kind of person who celebrates when a pear is perfectly ripe. I'm excited and I think it's pear day. So like I don't know. There's not one like single day that I can point out.
I like Pear Day, and like you said, with the funding, right? As a founder, the context is, okay, great, money's in the bank. Now, one, we got to go spend it, but two, we got to start the next round, right?
Yeah, that's tough. One of the things that's been tough, I would say, and I was relieved when we closed the funding round, was that I don't really have co-founders at this stage. So if I'm fundraising, I also still have to run the company, which was challenging last year, just in terms of there's not enough hours in the day to be sitting in a VC office, pitching them, and then, going back to work and running the company. So that was a bit tough last year. We're grown now. So I think the next round will be, my presence will be a bit less missed, I think, in the office, because we'll have a bigger team that is more experienced, etc. A bit of a founder's dilemma last year.
Oh yeah.
What's more important? Do you want to pitch this new guy that you don't really know if they will ever be able to invest, but until you sign, you keep looking, or do you actually spend time running the business? And a lot of the investors were like, yeah, we want to see traction, from a business and product and sales perspective over the kind of next couple of months. And I'm like, well, I'm spending my day in your office trying to fundraise, so it's hard for me to be like 100% dedicated to sales. It's kind of the chicken and the egg thing when you're a solo founder trying to fundraise and run a company.
I know. I mean, I work with a lot of folks just like you, right, that are doing just that. And it is a thankless job. It's never easy. There's this great website, and I've talked about it before, not even a website, a Twitter account called Tell Me How I Can Be Helpful, which is kind of a, quasi look into the world of VC. That is what a VC says to you when they don't want to see you again, right? And I think there needs to be another Twitter account. Maybe you can start this, or maybe I can start this, Ambre, which is tell me what your traction is. Right?
What is the market, right? How do they call that?
The total addressable market.
The TAM. What is your TAM? Tell me more about your TAM.
Tam, Sam, Sam, ding, dang, dong,
I was completely new. The first meeting with a VC, they asked me what my MRR was, and I looked at them and I was like, I've never heard this acronym. Can you please explain?
Yeah.
And obviously didn't work out with these guys. The next meeting, I knew exactly. I had my MRR, AR, everything metrics. But I mean, the VC world is a very kind of defined one with a lot of defined terms and things that when it's your first time fundraising, you're not into the VC game yet. You learn it fast, but
it's not easy. I mean, my shout out to Shane Brett from Gecko Governance. He had when he's going all the way back to episode 25, I think he was on, and he at a conference, I heard him say something to the effect of one of the first challenges he had in talking to VCs was they asked him what his CAC was, and he's like, okay, what is that? They said it was client acquisition cost. He's like, well, I don't know what that is, but I know what the cost of no client acquisition is. That's called bankruptcy. But I mean, on a more serious note, it's kind of like if you're not in this space and you're coming from a background that is not part of the startup ecosystem and you're not in it and not even rubbing elbows, but hanging out with people online in this space, you just don't know. Right. And it's like you can waste a good 3 to 6 months kind of, just with misdirecting your pitch, right? Or not even, That's why I love working with founders at the earliest stages, just because I've kind of been through the motions now. I know what good needs to look like. And it's like, all right, yeah, Tam, Sam, Som, ding, dong, ding. Whatever.
Exactly.
Right.
No, absolutely. I organized an event last year. There's this big, honestly, which in my opinion is the best crypto conference, is a conference called ETHCC, Ethereum Community Conference, takes place every year in March in Paris. And one of the things I realized when I was fundraising is how much, there's so many smart founders in the blockchain space, but they are very often coming from a technical background. They're not accustomed to the VC game at all. So there's a completely lack of understanding of how you should approach VCs. And then from a VC perspective, honestly, I've spent a lot of time, which is fine, it's part of the game, I guess, but I spent a lot of time educating VCs on what was blockchain, what was the opportunity, why it was exciting, etc. So there's this disconnect between VCs that are seeing blockchain as kind of this cryptic thing where they're not really sure if it's scammy or not. And then there's smart blockchain founders that, don't really know how to talk to VCs because they don't understand this world. And so I organized an event called ETHVC, and where we selected 30, which I believed were 30 really promising startups building on Ethereum. And we had 50 VCs participating from all over the world.
Wow.
And it was really 2 days focused on, there's a first day on education for VCs and education for startups, 2 separate workshops on helping startups pitch VCs and helping VCs understand the world of blockchain. And then it was 2 days of pitches and networking, et cetera. And it was honestly a real success. I think there's still a lot of confusion and misunderstandings between those two worlds. And if we can facilitate synergies between those, I think that would be really cool. It's more of a personal thing, doesn't benefit Kaiko at all, but I think
no, I'm with you. Well, I mean, spreading the good word for the community as a whole, right? Raising tide lifts all ships, right?
Yeah.
But it's if you have to spend all your time, the first 15 minutes of a 30-minute pitch talking about what is crypto.
You're in the wrong room. It happens so often that I've explained. I felt like the person I was in the room with liked what I said, liked what he heard, found it exciting. And then in the end was I think it's awesome, but I'll never be able to explain that in my investor committee meeting. So sorry, but that, And there's a question also of not just understanding it as an investor, but also being able to get a mandate for investing in crypto at a larger scale. This is something that a lot of VCs that are not dedicated to crypto still have to work on. And I was especially looking for non-crypto investors, and I'm so happy we raised with 2 funds, Anthemis, which is a leading fintech, insurtech investor in Europe, and Point 9 Capital. They're kind of focused on SaaS B2B models. They're both absolutely awesome. And I was really consciously trying to avoid pure crypto investors, just because I consider Kaiko as a financial market data services infrastructure company, not as a pure crypto company. And that ties back to what you said earlier about blockchain transforming capital markets. That's my thesis, right? It's not just a pure Bitcoin Ethereum play. So there is a lack of understanding of traditional investors of the crypto space. Will take a bit of time, I guess.
Absolutely. But it's good to see, I was saying green shoots a year ago, but now we're seeing more and more acceptance with Fidelity. There was an announcement last week that they are bringing an SEC registered Bitcoin fund to market, right? And this so more than just what the guys at Grayscale are doing with their trust, right? This is an actual fund, which is a little bit of a different legal construct, obviously. But lots of people in this space, in the traditional financial markets now that have turned the corner. And so much so that on the morning we first spoke, Ambre, I was already on my 3rd call or email with a founder who had left a big corporate job in the capital markets, in the last 5 years to drive change through digital assets, right? I'm always encouraged by the amount of really smart people that are in this space that come from a capital markets background, as it is definitely a great indicator of the accelerating pace of change, which is well needed. What do you say to our listeners out there in the capital markets that are thinking about making the jump like you did?
I think it's awesome, honestly. I mean, one of the initial reasons I got excited about derivatives is reading all the Flash Boys, etc., all those kind of stories of how exciting and creative working on a trading floor environment and structuring derivatives was. And the reality is that there are a lot of constraints now that keeps kind of people's hands and feet tied. And so the capital markets industry is less creative than what it was in the past. And I think that's the one of the things that, you know, drove me to crypto, is that there's still everything is yet to build. So that's I guess the exciting part. Sometimes I'm afraid when I see too many kind of, we're trying sometimes to replicate the existing financial world on crypto. And that stresses me a little bit, because I don't know if the space is mature enough to support that. I don't think so completely. Like when I see that there's like super leveraged financial instruments, derivatives that we're trying to do, securitization using blockchain, wrapping debt instruments, creating securitized debt on blockchains, etc. I'm like, wow, that sounds like 2008 again.
Yeah.
Like we should be careful. And I think, you know, the people that are coming or that consider jumping from traditional capital markets to crypto, it's tempting sometimes to do it for like short-term gain. And I think that's a bit of a shame, and that there should be some underpinning genuine curiosity and like adherence to the ethos of blockchain. And I'm not talking about being an anarchist and wanting to kill the banks. That's not what I mean. I mean wanting to rethink the way capital markets work. And that is fundamental. If you think about it, we're now like using internet to basically accelerate the way we did things 40 years ago. We just like communicate faster, send messages faster. We do plenty of things faster, but we just do it faster. We don't do it differently. And what blockchain brings is a different way to do that, which disintermediates a lot of existing folks. So that doesn't, you know, suit everyone, which I can understand. But, you know, if you take an equity derivative, if you take a very simple call option, which is you're going to pay a price for an option, and at maturity of the contract, that option will give you either zero if you traded in the wrong direction, or it will give you the upside between the final price of a security and the initial price of your security. This is like just a mathematical formula. It can be smart contractized very easily. All you need is a price input. That's where Kaiko comes in. Like, smart contracts in order to execute will require market data. So this is where I think there's a very interesting opportunity for us as a company. But this is just one example amongst many others of how you could just rethink the whole front office, middle office, back office, settlement, clearing houses. All of that can be, changed and rethought using blockchain. So I just think people that are have been frustrated, I guess, by the capital markets world as it is today shouldn't jump to crypto just for the quick buck, but mostly for the willingness to improve or change the way things have been working until now. I think that's a real good reason to move.
Exactly. That's why I got into the space. I mean, you nailed it. Is that, get in it's not even at the beginning anymore. We're well past the beginning, but get in at a point before we have transformed the capital market so that you can play a role in that. Right. And it's what you said about, seeing different corporations do some experiments and bond issuances and things like that. What I've learned is that it's a bell curve, right? And with all of these different businesses that are looking at this space and how can we actually move to digital assets and play a role in transforming the capital markets, you're going to have, your top 50% that actually are interested in doing this and the bottom 50% that are not. But the bottom 10% have no interest whatsoever, but you got about 40%, on the negative side that you might be able to move. You move to the other side of the bell curve with the positive side of the bell curve. You got another 40% kind of in the middle, right? And then the last 10% are the early adopters that do want to do this stuff, right? And what I found is that when you're talking to the corporate innovation labs in capital markets and financial services, you can kind of get a sense within the first 5 or 10 minutes of that conversation about where they fall on the bell curve, right?
Yeah.
And that's how you can direct your sales pitch. The rest of it, that 40% that are positive in that bell curve, but not yet an early adopter, a lot of them are just tourists, right? And they're just curious and they just want to kind of figure out how things work, but they don't have any intention of buying, right? So, there's a method to the madness here. Just shifting gears a bit. Sorry, go ahead.
No, I was just gonna agree. I was nodding.
Okay, very good. Just shifting gears a bit. In our first chat, you told me about your experience at MIT
Yeah.
and your interest in ag tech, which is a big thing in Ireland, where nearly half of our listener base are from.
Yeah.
How do you try to unite all of your interests together in keeping you moving with Kaiko? Like, for example, what's the crossover between crypto data and ag tech? Tell me about that.
Yeah, I mean, so honestly, there's no crossover as of now between my interest in crypto and agtech. I think, hopefully, if Kaiko succeeds, knock on wood, whatever, the success with Kaiko will enable me to invest more into spaces and companies that I find really exciting. I have invested in a couple of small startups that are building stuff in agtech and also in, I guess it's agtech as well as like supply chain, industrial food supply chain technologies as well. There's, again, like going back to what I said earlier in the intro, I think there's three things that are really my three investment thesis close to my heart, all related to how technology can improve, and then health, food, and money. I think those are three things without there's no civilization. Like there's no country, there's nothing without, if you're unhealthy, you cannot not have one of those three.
Yep.
So I'm generally monitoring these things, and hopefully that's my banking career had enabled me to acquire Kaiko, to invest in a couple of startups when I was relatively young, even just to invest in Bitcoin at a time where when you're 23, unless you're it's just hard to start having something to invest.
Yep.
So I just hope Kaiko will keep kind of growing, and that will enable me to in the future keep investing not only money but also time in other ventures that I find promising in those spaces. But there's no direct correlation between blockchain and agtech as far as I'm involved currently.
Wow, follow the money. David Kreng, who we had on from Lead Block Partners. We had him on about 20 episodes ago. Lead Block Partners, you've got to guess, yes, they are investing in blockchain-enabled businesses, early stage, but more on the sustainability side, right? So they invested in, I forget the name of them, and he's going to kill me for this, a French company that was... it was something related to ag tech, but also
insects. I don't know if it's tied to insects. So the part of ag tech I'm interested in is using insects to create new sources of proteins, especially in the context of animal feed. We create more food to feed animals than to feed humans today on a daily basis. So out of the kind of 100% of the food that is being produced, more than half of that goes for feeding animals.
Wow.
And I'm not personally excited about eating flies, soldier fly powder, not so much, or crickets or anything. But I don't care if the chicken that I eat has been eating crickets, right? That's perfectly fine. So I really focused on how we could use ag tech in the context of animal feed, and especially leveraging insects. So there's this French company called Winesect that is absolutely brilliant. I wish I could have invested in them. They were
okay.
Already, I don't know if it's this one, but
it wasn't them. It was something else, and I think the word "food" is in their corporate name. But
okay.
I'll come back to that. But I think it's doing a disservice by saying that anything that lives on a blockchain is the same as crypto, because it's absolutely not.
Yeah.
But at least there's a technology base there, which is setting the scene for how businesses are evolving and how ESG has taken hold and sustainability. And what are the technological foundations of the business that you need to have in place in order to deliver what you say you're going to deliver?
Yeah,
right? So there's something there, and it's all going to become
there's
hopefully all put together.
Huge applications for blockchain on everything that has to do with supply chain. There's so many things that can be done.
Yep, absolutely. So tell me, you mentioned being excited a couple minutes ago, but looking ahead, what do you think you're most excited about?
Honestly, I mean, growing the company. We're hiring currently 2 more people. It's kind of not something we try to not make it public until it's done. So I'm not trying here to advertise it, but growing the company not just from a product and financial standpoint, but also from a human standpoint. Just working with people is like basically the people at Kaiko make the company, right? And they are the ones creating the product and making the product and selling the product. So I think that's kind of something I'm quite excited about in the next couple of months, is really kind of growing the company, trying to keep our culture. We have a very, very international team. I think out of 16 people, we have probably like 13 or 14 different nationalities and backgrounds, which is very rare for a Paris startup. We're full English. We have a French jar. If somebody speaks French, they have to put a euro in the French jar to make sure nobody's left out because they don't speak French.
Yeah, I was that guy that was left out when I was working for BNP Paribas. I was the only one in the room and so many meetings that didn't speak French. And it was, I just felt like such a numpty, as my old boss used to say, just because I wasn't able to converse in French. And everyone, generally spoke English, but when it got into social situations, they all switched to French.
Yeah, and that's something I try to not tolerate in the office. I just think it's like, even if two person in French are having a separate conversation on something that is not relevant for the third person in the room, I just don't feel it's right to be speaking French. So the French jar rule is really applied.
That's great.
So yeah, the human growth, growing the company from a human perspective, I think is kind of key to how we're going to grow the business and how we're going to grow the product and everything. We're probably going to fundraise again next year for our Series A. So that will be exciting as well. Again, not just because I'm not necessarily excited of putting cash in the bank. I'm excited about what you can then do with the cash in order to grow more aggressively and invest and hire more people or maybe acquire some small businesses. It's like, how can you grow faster, better, stronger, and I guess that's why next year's next fundraise will be exciting. And generally, honestly, we've been on a quite nice early bull run now. The markets are well. Applications of actual real life applications using Ethereum are really growing. I feel that we're in a relatively nice path ahead.
Yep, absolutely. I see that. It's I'm following some of the technical analysis that comes out through Noelle Atchison on her Crypto Long and Short newsletter that she does.
Yeah,
and
she's so brilliant.
I love it, and she puts it into my terminology and makes it so much more easily accessible in terms of figuring things out, and talking about spreads tightening and things like that, bringing maturity to the market, and it's all incredibly positive.
Yeah.
Last question. Tell me, what is one thing that people wouldn't expect to know about you?
I'm a sailor. When I left banking and before Kaiko, I sailed across the Atlantic with my dad on a race, and we ended up 9th out of 250 or something. So not first, but not bad either.
Across the Atlantic. How old were you?
That was 2016, so I was 27, 28.
Okay. Well, it's like, I'm not going to sell you short on it. Wow, across the Atlantic.
Yeah.
How long did that take?
So, the actual crossing, so we went from France through Gibraltar, down to the Canary Island, down to Cabo Verde, and then across. So the whole thing took about 2 months, just under 2 months. But the actual crossing, which was from Cabo Verde to the Caribbean, took about 3 weeks.
Oh my God. Yeah. Well, 3 weeks is compared to 6 months when my ancestors left Ireland in 1842.
Different
times. Different times. But yeah.
You have it in your blood, right? You have the transatlantic in the blood.
Oh, absolutely. Absolutely. And I know, did your boat perhaps depart from Bordeaux?
No, we left from close to Toulon on the Côte d'Azur. Yeah.
Okay, because Bordeaux is where a huge amount of people left France to do a crossing, or even before the Irish started, going over to the U.S.
Yeah, you would go down through Brittany, etc., do a stop here and then cross. Absolutely.
Yeah, amazing. Great history there. All right. Well, Ambre, thank you so much for coming out to the show. This has been incredible. Really enjoyed our conversation. So thank you so much. And looking forward to staying in touch with you.
Thanks a lot for having me. And anybody who's listening, if you want to reach out, hello@kaiko.com or ambre@kaiko.com. I'd love to chat.
Fantastic. Thanks so much.
Thanks. Bye.
That does it for this week, folks. And thanks to Ambre for opening up her mind to help us figure out why she does what she does. Links and show notes for this episode are on moneyneversleeps.ie, so check us out online. Also, you could subscribe to our Money Never Sleeps newsletter at moneyneversleeps.substack.com. If you're enjoying Money Never Sleeps and want to see it continue, make sure you hop on over to Apple Podcasts and give us a 5-star review. Remember, if you or a colleague need help attracting and retaining great talent for your fintech or financial services company, it is highly advisable that you build a relationship with a team at Top Tier Recruitment, as they really know their stuff. You can find them at toptierrecruitment.com. And don't forget Conan Brophy from Create Sound. He mixes and edits each episode for us and is an excellent media man to get in touch with when you're thinking about launching your own podcast. As for me, I help startups get their products to market, get customers, and finance their vision. You can find me on LinkedIn, Twitter, or at norioventures.com. And you could follow Owen Fitzgerald on Twitter at OwenFitzgerald9. Finally, till next time, thanks for listening. See ya!